This week on 10th January, we have two impactful webinars lined up for you. By 11 a.m., travel smart, not risky. Insurance planning before you pack. By 12 p.m., we have what should investor do differently in 2026. Do join these webinars to make your weekend an actual learning weekend. Link in description. We'll see you there.
How did the US Boring Stocks Index fare in the month of December 2025? How was its performance in comparison to the Nasdaq 100 and the MSCI World Index? Firstly, I think the MSCI World Index did very well in December. It made 0.51 positive returns for the month. The Nasdaq index lost 0.46%, minus 0.46 was the return in the Nasdaq 100 index. And the US Boring Stocks portfolio lost 1.77% in the month of December. This is after the changes that I made. You all know that I made 3 changes. After the changes that I made, the new portfolio is actually struggling in December. What is this portfolio? This portfolio comprises 10 stocks equally weighted. The last rebalancing was done in the middle of the year. The 10 stocks are Crocs, Uber, Amazon, Alphabet, Apple, PepsiCo, Kava, Meta, Netflix and Costco. Most companies which you are extremely familiar with. I'm very tempted to add one company to this, but I would like to hold back for some more time and see how the portfolio is performing before I make the change. So on January 1, I'm not making any change to the US Boring Stocks portfolio. Now let's understand what contributed to this minus 1.77%. First, which was the worst performing stock in the portfolio? Surprisingly, the worst performing stock in the portfolio is Netflix. It lost 14.08%. Obviously, Netflix's decision to buy a big media company has not gone down well with its shareholders. It's minus 14.08%. After Netflix, the worst performing stock is Uber. It was down 6.66%. So again, Uber has been down this month. The third worst performing stock in the portfolio is Costco, minus 5.44% in December. And then you have Apple, which is minus 3.97%. And you have Pepsi, which is minus 2.78%. And after that, you have Crocs, minus 1.28, and Amazon minus 1.31. Alphabet lost minus 0.34. So you can see red all over this portfolio. So now let's talk about the companies which had a positive performance in December. You have Meta with 3% positive, and then you have Kava, which went up 15.06%. Remember that Kava was a stock I brought into the portfolio. It's done extremely well. So when you have a month in which 8 out of the 10 stocks are negative, then you would expect a big minus in the portfolio. Relative to that, despite 8 of these companies performing so badly, we have lost only 1.77%. So I must thank my stars. And we'll have to see what happens to this portfolio. Essentially, the US Boring Stocks portfolio is an experiment which I am doing publicly to understand how I see companies in US, and I'm more than happy to learn through this public experiment. And actually speaking, this experiment has not just taught me a lot about US markets, it's also helped me invest in the US markets. And here is the summary of the investment performance of the US Boring Stocks portfolio since inception. The US Boring Stocks portfolio started on 31st August 2023, so it's yet to complete 3 years. And on 31st December 2025, the US Boring Stocks portfolio had delivered an absolute performance of 61.18%. In contrast, the MSCI World Index delivered 47.57%. So we have done better than the MSCI World Index. But the Nasdaq Index has done extremely well. It has returned 63.01%. So we are still lagging the Nasdaq by about 2%. Now, if you look at this portfolio, here again, this portfolio's performance was largely helped by a few big winners. We did have some companies which did nothing, which we have now taken out of the portfolio and replaced with other companies. But largely, this portfolio has some of the best corporations in US, some of the best consumer plays in US. And exposure to retail and entertainment as well. So it's broadly a portfolio that represents consumption in the US and represents also the cutting edge companies which lead the US markets. Yeah, it doesn't have Tesla, and it doesn't have Nvidia, but it has many of the other players which are very, very important names in the US market. Personally, I own all these names and I'm looking to add some of these. So at every decline, I would be adding some of these companies and building a portfolio gradually over a period of time in the US markets. If you already are an investor in the US markets, this portfolio helps you understand what is my thought process, compare it with what you're thinking. Probably you can add your own layers of thought. Surely, you must comment on this portfolio, on its performance or the lack of it, on the choices that I make in this portfolio, and what you think is a different but probably a better approach to investing in US stocks. But sure enough, make the investing boring and let's be on this journey of learning together. Thank you for watching this video.